Hey everyone, this is Best Investments Day by Day. We're diving deep into the world of wealth creation with 15 proven rules to triple your income, inspired by the one and only Grant Cardone, a real estate mogul who went from broke to building a billion-dollar empire. Grant's 10x philosophy is all about pushing your limits and taking massive action to achieve your goals. In this video, I'm sharing his no-nonsense strategies on how to dominate your finances, build massive wealth, and achieve financial freedom. If you're ready to break free from the shackles of mediocrity, hit that subscribe button and share this video with anyone who needs a financial wake-up call. Get ready to take control of your money, supercharge your income, and live life on your terms, because we're about to unlock the vault to financial freedom. Let's get real, folks. The first rule to building wealth is simple. Don't live beyond your means. If you're constantly drowning in debt, you'll never get ahead. It's like trying to run a marathon with a 50-pound weight strapped to your back. You've got to cut the dead weight and get your spending under control. This means taking a hard look at your finances and identifying areas where you can cut back. Do you really need that daily latte or that expensive cable package? Remember, every dollar you save is a dollar you can invest in your future. This isn't about deprivation. It's about being smart and strategic with your money. It's about making choices that align with your long-term financial goals. So, commit to living below your means and watch your financial situation transform. Remember, financial freedom starts with discipline. Take control of your spending, and you'll be amazed at how quickly your wealth will grow. This rule is especially crucial for those of you who are just starting out on your wealth-building journey. When you're building a business, every penny counts. So before you whip out that credit card, ask yourself, can I deduct this expense? Now, I'm not just talking about tax deductions here. I'm talking about investments that will ultimately put more money back in your pocket. For example, investing in your education or in tools that will help you grow your business are tax-deductible expenses that will pay dividends in the long run. On the other hand, buying that fancy new car or that designer handbag might give you a temporary boost of satisfaction, but it won't do anything to improve your financial situation. In fact, it will only dig you deeper into debt. Remember, wealth is built by making smart, strategic decisions with your money. So be disciplined, be strategic, and focus on investing in yourself and your business. You can't manage what you don't measure. This applies to your finances as well. If you don't know how much money you're spending each month, you're flying blind. It's like trying to navigate a maze in the dark. You need a clear understanding of your income and expenses to make informed financial decisions. The first step is to track your spending for at least 90 days. And I mean everything. From your rent or mortgage payments to your daily coffee fix, write it all down. You can use a simple spreadsheet, a budgeting app, or even just a pen and paper. The key is to be consistent and thorough. Once you have a clear picture of your spending habits, you can start to identify areas where you can cut back and save more money. You might be surprised at how much money you're wasting on things you don't even need or use. I'm going to be blunt here. You are not a bank. Your job is not to bail out your friends and family members who are struggling financially. Now, I'm not saying you shouldn't help those in need, but lending money to loved ones rarely ends well. It can strain relationships and lead to resentment. Instead of lending money, offer your support in other ways. Help them create a budget, connect them with financial resources, or offer to lend a listening ear. Sometimes the best way to help someone financially is to empower them to help themselves. Remember, your financial well-being is your top priority. Focus on building your own wealth and creating a secure financial future for yourself and your loved ones. Listen up, investors. This rule is crucial for building long-term wealth. When it comes to investing, you should only be focused on assets that generate cash flow right now. I'm talking about investments that pay you every single month, like rental properties, dividend-paying stocks, or online businesses. Forget about speculating on the next hot stock or pouring your money into investments that promise future returns. You need cash flow today, not someday. Cash flow is the lifeblood of any successful investment portfolio. It's what allows you to weather economic storms, reinvest in your portfolio, and achieve true financial freedom. So be ruthless with your investment decisions. If an investment doesn't generate positive cash flow, it's a no-go, period. Let's be clear. Gambling is not a wealth-building strategy. It's a surefire way to kiss your hard-earned money goodbye. The odds are always stacked against you, and the house always wins in the end. Instead of throwing your money away on lottery tickets or casino games, invest it in yourself and your future. Use that money to start a business, invest in real estate, or acquire valuable skills that will pay off for years to come. Remember, building wealth is about making smart, calculated decisions, not relying on luck or chance. So ditch the gambling habit and focus on proven wealth-building strategies that will help you achieve your financial goals. We all deserve to enjoy the fruits of our labor, right? But there's a smart way and a not-so-smart way to indulge in life's luxuries. The key is to limit your spending on luxury items to the passive income generated from your investments. What does that mean? It means that you should only be spending the money that your investments are generating each month, not dipping into your primary income, or worse, racking up debt to fund your lavish lifestyle. Think of it this way. Your passive income is your fun money. It's the money you can use to enjoy life's little luxuries without feeling guilty or jeopardizing your financial future. Now, this rule might seem counterintuitive, especially in a society that emphasizes homeownership. But hear me out. Renting gives you flexibility and freedom. It allows you to move quickly if a better opportunity arises, and it frees you from the burdens of property taxes, maintenance costs, and other expenses associated with homeownership. Plus, when you rent, you can often live in a nicer area than you could afford to buy in. This gives you access to better schools, amenities, and networking opportunities. Remember, it's not about owning things. It's about having access to the things you need and want. Of course, there are situations where buying a property makes sense, especially if you plan to hold it for the long term and generate rental income. But for many people, especially those just starting out, renting is a smarter financial decision. We live in a consumerist society that constantly bombards us with messages to buy, buy, buy. But the truth is, most of the things we buy are depreciating assets. They lose value the moment we acquire them. Instead of accumulating more stuff, focus on acquiring assets that appreciate in value over time. I'm talking about investments like real estate, stocks, or businesses that have the potential to generate passive income and grow your wealth. Remember, true wealth is not measured by the things you own, but by the financial freedom you create for yourself and your family. So, break free from the consumerist trap and start building a solid financial foundation based on appreciating assets. Now, before you accuse me of being heartless, hear me out. I'm not saying you shouldn't support your children, but giving them a free ride financially is doing them a disservice in the long run. Instead of handing them an allowance, teach them the value of hard work and earning their own money. Encourage them to start a small business, do chores around the house for pay, or get a part-time job. These experiences will teach them valuable life lessons about money management, responsibility, and the satisfaction that comes from earning their own way. They'll develop a strong work ethic and a sense of financial independence that will serve them well throughout their lives. This rule is crucial for protecting your personal assets and maintaining financial clarity. Always keep your business and personal finances separate. This means having separate bank accounts, credit cards, and accounting systems. Not only will this make tax time easier, but it will also protect your personal assets in case your business faces legal or financial challenges. Plus, it creates a clear separation between your personal and professional life, which can reduce stress and improve your overall well-being. I know, this one might ruffle some feathers, but trust me, maintaining some degree of financial independence, even within a marriage, is essential. It's not about secrecy or lack of trust. It's about respecting each other's financial autonomy and avoiding potential conflicts down the road. Having separate accounts allows you to maintain control over your own money, pursue individual financial goals, and make independent decisions about spending and saving. At the same time, you can still have joint accounts for shared expenses and financial goals. This rule applies to both personal and professional relationships. If you're considering entering into a business partnership or even a serious romantic relationship, it's essential to have a clear understanding of each other's financial situation. Don't be afraid to ask for financial transparency. If someone is unwilling to share their financial information or is evasive about their financial history, it's a major red flag. It could indicate financial instability, poor money management skills, or even potential deception. Remember, protecting your financial well-being is paramount. Don't let emotions cloud your judgment when it comes to money matters. Look, I'm not saying you should abandon your friends and family members who are going through tough times, but you need to be very careful about letting their financial problems become your own. People with chronic financial problems often have a scarcity mindset that can be contagious. They may constantly ask for handouts, make poor financial decisions, or drag you into risky ventures. Protect your financial well-being by setting firm boundaries and limiting your exposure to their financial drama. Offer support and encouragement, but don't let their financial burdens derail your own financial progress. There you have it, folks. 14 powerful rules to transform your finances, inspired by the one and only Grant Cardone. Remember, building wealth is not a sprint, it's a marathon. It requires discipline, commitment, and a willingness to challenge conventional thinking. If you're serious about achieving financial freedom and living life on your own terms, subscribe to this channel for more game-changing insights and actionable tips. We'll explore advanced strategies to help you invest wisely, build multiple streams of income, and retire rich. Remember, your financial destiny is in your hands. Take control, take action, and start building the life of your dreams today.